All right, welcome back to the Real Estate Huddle. And we're excited today. We've got a special guest. This is episode 102. And our guest is Gary Enos, which is actually a client of ours, an active client. So welcome, Gary. We're super excited to have you.
Thanks. Glad to be here.
Yeah. And so if you're listening right now, you may have heard, a lot of these podcasts tell a story, right? About like, hey, we had this successful story. Everything was peaches. And now we're going to talk about it. And we're going to talk about how great we are, right? So this is not going to be one of those. If that's what you were hoping for, maybe skip to the next one. But Gary's actually an active client that we have right now who actually found us through our YouTube channel. And so we appreciate, you listening, and we're just going to have a conversation today talking about your perception of the market and, where things are at. We'll talk some numbers about the Denver real estate market, what your experience has been so far as you've been looking at homes and trying to figure out, navigate through this, as far as what you want to do and why, why you're feeling the way you're feeling, about the real estate market here in Denver and that sort of thing. So, I guess I'll just kick it off. I'd love for you to just kind of tell your perception of like the story of like since you contacted us and we, you started looking.
Start with how you found the podcast.
Sure. Okay. I don't know. I watch a lot of YouTube. I think most people go home, sit on their couch, they watch Netflix. I'm a YouTube guy, and how exactly your channel popped up on my feed, I'm not sure. I can't remember if at this point I was already digging into housing market trends or what have you. But it was, focused on local. It wasn't just general real estate knowledge. Obviously, You guys focus on Denver. And so one of your titles jumped out at me, and I've watched several of your videos, multiple, so I don't remember which one it was. But I do remember, seeing headlines out in the world that Colorado is having a unique market event where it seems to be going down. And I'm an opportunist, and I saw maybe an opportunity beginning to present itself, and in just the interest in that market and looking to gather some of that information about what's going on in the trends of the market, I was drawn to click onto your video. And you were talking about how it is changing a little bit to where buyers get to ask for more concessions or hold out on pricing, and make a little bit more choice, look at multiple houses, things like that. That all was in alignment with what I had been reading and digesting about the market here in Colorado. And as a millennial, I think we all want to own a house, and we feel like we've all been robbed of that opportunity.
Yeah.
And as somebody who likes to jump on opportunities, seeing one start to maybe form, I wanted to keep my thumb on that pulse. So that's how I started watching your videos. There's a lot of good information in there. And a lot of your videos confirm some of my bias about what I want to be happening in the market. So cool. I watch more of them, and good information there. So it was kind of a no-brainer. When I was thinking about starting to look at houses, I'm like, how do I find a real estate agent? But I was already watching your videos, so it just kind of clicked for me.
That's awesome.
Yeah.
Well, I appreciate you reaching out,
of course.
It's been great to get to know you, and especially like as another local business owner, it's awesome. You're in the auto business, right?
I am. So,
very cool. And we'll talk more about that later, because we definitely want to give a plug for that, because you run a great auto business up there. And so, but the cool thing is you reached out, you were very real about your approach, of what you wanted, what your thoughts were. And I'm glad to hear that it confirms some things that you were seeing, because my number one goal is just to report like real numbers, and be very real on YouTube with what we put out there, and the market may be changing, and we may have another story that we're telling as the numbers change. But it's like a golf coach once told me, men lie, women lie, numbers don't lie. Right.
Sure.
And so you gotta listen to the numbers. And so most real estate agents we found in our industry, don't even look at numbers. Like they just go on whims and how they feel that day. And it drives me crazy, because we have an awesome statistician for our company that puts out numbers every month, and we just pour over those numbers. And so a lot of the stuff that we put out there on YouTube is all numbers that come from that research, that happens. And, we're looking at average price. We're looking at inventory changes. We talk about it every week in our team meetings, just so that we understand that better. But, inventory is still floating up there. And that's one of the big things that you're looking at, obviously, is, we've got, right now we have 12,600 homes on the market active this week. And, last year, the same time, we were closer to around 8,000. During the beginning part of the year, we were closer to 6,000.
Sure.
So we've seen that number just climb up to 14,000 this year, and now it's dipped down seasonally just a touch. But what does that mean for you? If you're looking in the market right now, how does that make you feel as far as your approach goes to land the right house for you?
Well, that's good information. I didn't know it ticked up to 14,000, and now maybe that's the inventory that's available is softening a little bit, and that's definitely good to know. I have heard, and obviously I'm not a real estate expert, but I've heard when you get to the point where inventory is double of where you were the year prior in the same kind of point in the year, that is an indicator of a buyer's market. House prices coming down 10% might be an indicator of a buyer's market. And, when I first started dipping my toes in the water to look at the housing market, I was under the impression that we are in a full-throated buyer's market. I think we're in one, but the market's still getting used to that fact. And from what I've seen is there's sellers who, in my mind, really should be considering offers more or lowering their prices, but they're holding out because they're just not ready to kind of surrender to that buyer's market.
Yeah.
And so I feel that aspect, that foundation of the kind of lingering seller's market needs to crumble to be in that full-throated buyer's market. That's my perspective.
So you said something early on, just the way numerics driven, what you're seeing. I think it's important as we talk about your scenario, the way you think about use of money. And we'll talk more about your business, but that's one of the things we talked about the very first day. There's this money. What can I do with it? I know what I can do with it in my business.
Sure.
So can I find something in the world of real estate that in your mind puts that money to work in a truthfully not as positive an ROI, but gets you in the business of being a homeowner, which you've aspired to do. Anyway, that was a big part of my learning from you, is the way you think about the option you have for your own money. I think that's relevant as these guys, get their head around the way you think.
Certainly. Yeah, no, certainly. If there was, if it was a different time and you could just go get a really low interest rate mortgage with very little money down, it'd be a very easy decision, or at least easier, because yes, my ROI in my business does outperform index funds and the S&P. And if I were to just put that money, let's say, in a portfolio somewhere, I'm not going to get the same annual return as I do running my business. Of course, I have to be there 6 days a week managing that, and there's a time investment, so I would expect a higher ROI.
Yeah.
Putting it into a house, some of the trepidation is you're not going to get that ROI, and there's a lot of that ROI is going to bleed off into paying interest to the mortgage lender. But also, I think owning a home can sometimes be a full-time investment of your time. And so there's all of that to consider. I think people buying a house want to make it not as big of a decision as it is.
Yeah.
And then once you jump into that pool, you realize it's a bigger decision and there's more to consider. And so how do I make my money work for me? Now, at the same time, a lot of my money does just sit in my business account. I'm not using every single dollar that's there every single day as working capital.
Good business move.
Yeah, and it's good to have the cushion, because my vendors and the people that we pay for work, who work for us, our contractors, they know when they bring us something, they're getting a check right there, and then when they walk into the bank, the check's clearing. There's no. I love some of these small auto dealers. They have that issue. It's like, don't cash that check till Friday.
Right.
We don't have that issue. Part of that is because my philosophy of working capital is some of it does need to work as a cushion.
Yeah, definitely. Well, and obviously that's your golden goose, right? Like that's what's going to continue to produce. And any good business that is operated wisely, I think should be your best ROI. There's no question about that, And so that's the key, right? Is real estate can do some great things for you long term, and the longer you hold it, typically the better it gets, because you're on the amortization schedule, you're paying more principal and less interest every month.
Sure.
And so your long term holds are where you can really win as far as real estate goes. But you have to consider that as a business owner. Like, where's my money going to be most effective? And I like your thought process there for sure. And so
now I took you off you were about to talk about your thoughts on the market, because I think that's what we've seen. We see someone drop their price on a house we're interested in, not anywhere near to where we think they should. That's been a learning curve for both of us as we go through. Like, hey, that's better. Is it where we need it to be, though?
I think the most interesting thing we could do, if you're cool with this, Gary, is talk like real numbers. Like,
Sure.
What was the offer? What was the counter?
Yeah.
And what was your decision? Right?
Yeah.
So do you remember those numbers?
I think so.
I remember them.
Okay.
Like, I pour over them every day.
Yeah.
And before we go into that, I just
Sure.
want to tie it together, because you're like, oh, we took you off of the market, and your analysis of that. I think they go hand in hand. I mean, I want to see the price come down, because also then the percentage of down payment I have to put is less, and that means more working capital stays in my business. So it's all tied together. But in terms of offers, so we looked at one house. We looked at several houses in the same neighborhood.
Yeah.
Clearly the same builder, just from the layouts and everything, right in the same loop. It's West 78th.
One of your best buddies is in the neighborhood.
Yes, one
He
of
had
my friends.
chirped in
lives
your ear
there.
about what he thought his house was worth, and then didn't go on the market because he couldn't get what he hoped it was worth. Partly,
Correct.
Right? Okay.
Yeah, he
Same
thought
neighborhood.
about selling, and then he didn't. And I love his house. I mean, everybody loves his house. It's a
Yeah.
great place to hang out.
Cool.
So I took an interest in this builder, I guess, this neighborhood. And so we looked at one kind of across the street from where my buddy lives. And that house, once upon a time, was listed at $779.
Wow.
When we looked at it, I think it was listed at $750, and they've since cut it again one more time to $735 or $725. We went in at an offer of $700 on that. They came
We could have
back.
gotten to 725 before we made an offer.
You think it was listed back? It was already cut to the $725 before we made an offer. Okay, so it was $725.
Yep.
We went in $700.
Yeah.
They came back $715. The time between me committing to putting in a $700,000 offer, them getting back to us, it being not at the number I wanted to be at, being higher, it gave me more time to kind of dig into the analysis more.
Yeah.
Which may have been, time kills all deals is something we say in the car business. Okay, the more time that goes by, the more time there is to think about things. Talk yourself out of a deal,
Right.
Or let someone else talk you out of it.
Sure.
And people can be in your ear, whether it's people on YouTube or people writing editorials or data itself. And so I'm looking at often the FRED numbers, the Federal Reserve. I think it's in St. Louis, Missouri. They put out a lot of economic numbers about the housing market and inflation and CPI and all of that kind of stuff.
Yep.
And if you look,
Should have had this pulled up right here.
oh man, that would be awesome, because if you
can't, but we
yeah,
can.
right. If
Jesse
you-
can do that later. Yeah.
If you look at those numbers, and specifically if you dial into the FRED housing prices over time for just Colorado,
Yep.
you can kind of see a trend there. You can kind of see where that trend should be right now, but it still seems inflated, because after COVID, with the artificially deflated interest rates, it artificially inflated demand at a very high clip.
Yeah.
So you had a lot of people buying homes because it was so affordable on the lending side of things. That created a kind of a choke on inventory, which obviously is going to drive pricing up. That's just supply and demand. If you don't, the highest bidder is going to drive pricing up. So that, I think, happened at a faster rate than it would have had we not had the catastrophic event of COVID and the aftermath thereof.
Right.
And so now, now you get into the thought of, well, there's got to be a correction somewhere. Correction doesn't necessarily need to be some huge drop in prices. It could be stagnation in prices over time, because as that x-axis moves forward, over time the y-axis would go up. So if it's just being straight,
Yep.
if it's not moving upwards over time, that correction kind of is baked into the stagnation. So
Love that.
some of it is just time. Maybe
Yeah.
some of it isn't. Well, right now I want to see these prices come down.
Yeah.
But
So Gary and I sat on his laptop last week, 2 weeks ago, and he showed me this Fred data. We look at a lot of data. That's not one that I personally look at a lot. But what I think you're trying to say is if you look historically over time, we can find the spikes right after COVID, and then you get these correction periods that repeat cyclically in year, right? And the way we left it was we're getting new data right about now, right?
yeah, what's today? 22nd? 8 days.
8 days.
30th, the Q3 info.
So the
comes
30th,
out.
and that's where Gary, I keep calling you Larry, sorry. Gary really believes we have a little downtick that we're going to see, and that'll guide what we do next.
I think we're in the downtick actually. So, like I said, in this moment, do I want to see prices come down? Yes, but let's say 6 months or a year, they've stagnated. That might be enough to constitute a correction. If where that kind of regression trend line was headed is where we are in a year, but we're at these same prices, that is a correction. So I think of that, but I do think prices have come down too. Like I said, Zillow estimates and stuff on this house were 780. They listed at 779.
Yeah.
They were considering 707. Or the real estate agent on that house was at least saying, maybe there's a way to do 700. Can you come up 1% to 707? So, I mean, that's a 70,000 decrease.
He's a very tired real estate agent.
That
Yeah.
is 10%. And so I think they have come down a little. The problem is that when you look at that trend line, it just seems like they maybe haven't dropped enough. And again, this is where I'm not an expert. I know how to look at data. I studied psychology in school. Obviously, I didn't go anywhere with that. I now own a car dealership. But huge part of psychology is statistics. That's all it is.
Yeah.
And so when you're studying that, you're learning how to look at data, how to analyze it, how to plot it on a chart. There's something called a natural logarithm where you can, instead of just looking at the data, the raw data, you look at the natural log of it, and it makes it a little easier to identify trends. And there is almost like a perfect cycle on the natural logarithm for the Fred data for Colorado that
That's what I was
goes
trying
up
to describe.
and flat and down a little and then up and then flat and then down a little and then up and then right now we're kind of at where it's starting to be flat. So I think sometime between now and 9 months from now is just the most opportune time to buy. And a lot of it's going to come down to, are the sellers willing to drop even below where they think it should be right now? And so the correction has to happen on both ends, the buyer and the seller. And it's, for me, I'm kind of holding my breath a little bit.
Yeah.
Do
I
you
love what
ever-
you said. Okay, go ahead.
Sorry. Do you ever feel conflicted in that? Like, are you ever scared you're going to miss it at all? Or are you more
yeah.
just...
Good question.
Yeah.
Do I doubt myself in every aspect of life every day? Of course I do. I think, people who know me as a very strong-willed person who's confident in what I believe and has a tendency to think I'm right a lot. But the flip side of that is I've had the bad side of that as well, where I'm so convinced I'm right about something and I just didn't analyze it correctly. So does that apply here? Yeah, absolutely.
Well, you've admitted that you're looking for like validation of something, right? So that was one house. There were two others in the neighborhood that have caught our eye.
Yeah.
One was a nicer home. It was just more updated, and they started at 769. By the time we saw it, it was 749, and we were comparing to the last one, unequivocally nicer house, and that allows us to figure out what the price should have been on the first one. They have since come down to 735, and we offered 720.
15 or
No,
720,
I think
yeah.
720.25, and they countered it like 735. Anyway, that's another data point. there was a third in that market, which we didn't really look that closely on, but it was right on a golf course, right on the fairway.
Yep.
And they were priced at $795, and we, wrong price.
Yeah.
They're now down to $749.
Is that right?
Right. So what Gary and I are waiting, something is going to happen with one of these three houses, and then we will be, oh crap, we missed it, we're wrong, or we're right, we might be more right in
Just
another
keeps getting
3
sweeter.
weeks.
Yeah.
Right.
Yeah.
But we're waiting for one more data point,
Yep.
certainly for this neighborhood,
Yeah.
for us to really, solidify our confidence in
Sure.
one of these homes and what we believe it's worth.
Yep. Well, good points. And I think when you said that, a downturn doesn't necessarily mean a huge drop in pricing, it could mean stagnation over a longer period of time. I think that the latter is much more likely in our market. And you've heard me say a few things in YouTube, like stats that are pretty, incredible right now compared to where Denver's been at in the past. Like our first-time home market, like the first-time home buyer representation of the market is usually about 36% of the market. Right now, it's 18% of the market. The first-time home buyers have gone away, basically, or been cut in half. And then 70% of all people that don't own a home right now don't have the income to be able to qualify for the average payment right now.
Sure.
Right? So there's some serious affordability issues with interest rates that are causing a little bit of stagnation in the market. And then, you see the inventory change of going up, to double what we were last year in the springtime. That's obviously a big change. So there's all those factors, right? And then you also take a step back and you look at, okay, two things could be true, right? Denver's kind of a unique growth market that has been for a long, long time, right? We shot up 33% during the pandemic. But if you take that out, Denver's been a market that's grown on average about between 6 and 7% per year annually. And so a steady growth market, that's one of your best places to put your money in, a steady growth market. I've got people in like Peoria, Illinois that buy all these properties just to have cash flow. Zero growth in that market, right?
Sure.
Because it's just, there's no job growth. There's no, industry there that's really changing. And where Denver does have that, right? We've got a lot of, a very diverse economy. We used to just be an oil and gas town. Now we've got all these things happening that's turned us into a pretty steady growth market. So you look at Denver and you say, okay, the Great Recession was a time where we lost between 8 and 20%, depending on where you were in town. You look at the Great Depression, we lost value then. I don't remember. I don't even know the numbers. My great grandpa could probably tell me if he was still alive. But those are the two times in our market where we've lost value. Other than that, what we call a recession in Denver is 1 to 3% growth. Typically, it's stagnation.
Sure.
Yeah, and that's what stagnation looks like for us. Where stagnation in another market looks like 1 to 3% loss, right? Because their growth is 3% per year on average. Which isn't anything to write home about, right? If you're used to 7 at a higher price point. But that's how their market operates, Just because that's been the history doesn't mean that something couldn't change and something couldn't happen, right? Obviously, we've had big political swings. We've had big things happen in Denver that I hear comments on YouTube all the time about, like, just the political scene. I've heard a lot of comments about the market's crashing, it's going to tank. These sellers still think it's 2022. And I look at the real numbers, right? And here's the real number. Like, this is the crazy thing. You look at 22, average price year to date was $689,000.
Yeah.
That was the real average price in this time of year, end of August, 2022, $689. Average price today, year to date, 2025, end of August, $712. So our pricing's actually gone up since the pandemic, which is insane, right? That has not happened in a lot of areas in the country. And so it's a hard thing for people to grasp. And I think that the stagnation may be a bit of a lagging indicator, right? It may be something where we don't see the result of it quite yet. It's started, like you said, but it's still lagging and showing up, right?
Sure.
And so I think that there's a lot of that. The other thing is seasonality. When you're talking about the Fred chart and what's happened, to me, it sounded exactly like just seasons in our market. Like, Denver is a very, very seasonal market. That's the crazy thing about our town is, like, just like the weather changes seasonally, our market changes seasonally. And we have, 75% of our annual growth comes in 3 months. It's from February to April. That's where our growth is. So if we grow 10%, 7.5% of that growth was from the listings that were on the market during those 3 months. Then it's still okay. Still a pretty good growth market in May, June. That's where most of our other growth happens. Our market falls off between July and Labor Day, about a week and a half after Labor Day. It's usually mid-September, which we just crossed. That's called the summer lull. And in our market, 9 times out of 10, right? Throw away COVID. 9 times out of 10, we see about a 3 to 5% drop in average price in our market during those 2 months, 2.5 months.
Wow.
So that's the dip that you see. And usually it's where the sky is falling, right? And everybody's saying, what's going on? All these price reductions. We actually led the nation in price reductions, you know?
Right.
Like you may have seen that, but like, I mean, crazy. And it happens every year. We always have this summer lull. It's just ugly, right? And then the market just flattens out in the fall. And so we usually have our second best time to list is usually during like that mid-September to mid-November. And inventory will start to slow down a little bit, you know, and we're at 12.6 right now. We actually went up last week, which is surprising to me. Like that's a sign to me that things are not quite following like the same pattern as they always have.
They haven't stabilized yet.
Yeah. Yep. Because usually we would see like 300-400 home drop, you know, from that last week to this week, right?
Sure.
Now that we've gotten past Labor Day and we're in mid to end of September now, I would have expected to see a drop and we saw an increase. So that to me is pretty telling, right? So those are the numbers that we're tracking and we're looking at all the time to see like, okay, what's the temperature of the market? And I think there's still some great opportunity to get a deal, you know, this fall because the market's reacting late to
Certainly.
the fall market.
Yeah,
So,
unfortunately, you just can't predict where the market's actually. You can try, but
Yeah.
you can't definitively predict where it's going to go. And so, you know, I'm looking at numbers, you know, over time, more than just the last 5 or 10 years. Like growth from the Fed actually starts the index of 100 starts in 1980, and basically, so if you're at 600 now or 700, that means that house is 6 times the price now than it was in 1980. And as you go up that chart, you can kind of see, okay, in 2011, kind of when the market returned to the trend line it was on before
Yeah.
the housing bubble.
Yep.
It was like 2011 when it returned.
Sure.
And it like almost perfectly returns to the trend line it was on. And at that point, I think it was 3.2769 times what it was in 1980. And that I might be off on that number, but it was kind of burned into my brain as I was doing all this math.
That makes perfect sense because there's a lot of homes that sold for around 80 grand in 1980,
Yeah.
right? And now they're selling for 6-7 times that, right?
Of course, yeah.
And back in the recession, we had homes at 250 that were available, 3 times that, right?
Yes.
That were very attractive, you know, starter homes during that time. So that makes a ton of sense to me.
Yeah, there's a lot of. I mean, the index got up to like 750 at the high point here post COVID, and just my analysis kind of tells me it should be more like 625, 650. You know, do you want to wait all the way to the bottom on something? Probably not. That's how you miss opportunities, like you were saying. I think it's almost better to get in right before the bottom.
Yeah.
Because then you get a little more dip, and then things just start to go up from
Sure.
there, and returns to that trend line.
Yeah.
So,
And to your point before, that could mean, you know, if things are at 750 and you think they could be 650, it could just mean that we stay stagnant until
when it
that
should have been
catches up.
750.
Exactly.
Exactly.
Yep.
Right.
And that's why I go back to that. I think that's the more likely deal because economists have said for years 12,000 homes in our market total is a balanced market. And we're just above that. So we're in a slight buyer's market from an inventory standpoint,
Yes.
but it's not a full-fledged, like we had 28,000
Right.
homes back in the recession. That was a saturated, full-fledged buyer's market, right? So we're not quite there, you know, where if we were, I
don't think we'll
would
get
expect drop fast.
I don't
Yeah.
think we have the equity position problem would cause that.
You're right. Yep.
You know, and it's hard to say what's going to happen with the economy, but the reason, because people listening to this might say, well, why, if stagnation is the answer and in a year 750 makes sense, why not just buy it now for 750 once you live there in a year? Sure, but the dollar is weaker in a year than it is today. So that 750 is actually less that you're spending. And I think some people have a problem wrapping their head around that. But,
Sure. Yeah.
you know, $750,000 in a year or two is not what it was today.
Yeah.
It's less money.
Sure. Yeah.
You know, just due to inflation
Well, and you're thinking like a business owner again. It goes back to that, right? Because if anyone that just has normal salary income is looking at this, they may be thinking, look, I can get a tax write-off on my interest of $20,000 a year. That'll help me and save me, let's say, $7,000 in taxes, whatever.
Sure.
And then maybe I'll get 2-3% growth, and maybe my place is worth, 15,000 more next year or something like that. And then I paid down principal $5,000. So now I'm at a $20,000 to $27,000 position that's better than what I would have been, and I didn't throw a bunch of money to the landlord, right? But you got to think of the interest that you threw away too, and then the other costs, right, and all that stuff.
Cost of ownership.
So you probably end up maybe $10,000 to $15,000 better after a year if the market stays pretty flat. All things considered, right, with all the benefits of home ownership. And for you as a business owner, that may not make any sense unless you feel like you got a dip, right? You took that dip and you got a great price on a home that probably was worth more, but because of market conditions and maybe a seller getting a little motivated, you got a great deal, right? Then after a year, that home could be worth, especially after a couple things that you put into it, which we love to coach you on that as far as like, hey, here's your best angles that you can take to really enhance, get 300% return on some of the things that you can do to your home. Your home may be worth $70,000, $80,000, $90,000 more next year because you caught the dip, right? So I think that it all depends on how you look at it, and I like the way you're approaching it and looking at it. And I'm a bargain shopper too. Like I like to get a deal, and I think sometimes anytime someone asks for a discount, I'm always like, yeah, that's great. I would do the same thing. That's just how I operate as well. Anytime, even in some retail like scenarios, I'm like, well, could I get it for this? And sometimes all you have to do is ask, and then they'll do it for you.
Absolutely.
And so
we do that at my store.
Yep.
Especially when it's slow, like it is right now. You come into my store right now, you're going to get a much better deal than you did last month.
Even month to month, yeah.
That's crazy. In our industry, those cycles, it's a way more volatile. I mean, you'll have a month where clearly inventory is a lot less money, and you should go buy a bunch of it.
Yeah.
Even though it's slow, because it's going to pick back up because that volatility is just so much more. Yep. It's going to turn around way sooner than something like a housing market or stock market would. So
no question.
I think that's the buyer mentality versus the other side is the seller mentality, and it takes two to tango.
Yep.
I think there's an opportunity to buy a house and get a good deal right now where you're well positioned. I'm a funny animal because I'm not a materialistic person. I don't need like the perfect house. I'm not going to fall in love and get emotional like walking through one or get jealous if it gets delisted. And so because we're looking at 3 or 4 houses all in the same neighborhood where there's been no movement, no pending status showing up on these listing sites, it makes me think, well, then that neighborhood at the very least is a buyer's market. Mm-hmm. And one of these houses is either going to sell, cut their price, delist, and that is another point of data for me to go in and then maybe make a decision. Okay, 100%. Well, these 2 houses lowered their price, so now this one I really like. I'm going to tell them, look, your houses in the market are dropping, but here's my offer.
Oh yeah.
And maybe there's something to play with there.
Totally. And we'll use that leverage,
sure.
because real estate is hyper local.
Sure.
And you got to use the comps that are within a quarter mile, that have sold in the last 6 months or have been listed in the last 6 months to really dictate where things are at.
All those agents are looking at those listings as often as you are.
Yeah, I'm sure. 3
in the market. Everyone's waiting for the next move.
Right.
Someone's going to be more driven, more in pain, make that first move. And they did. That one house dropping to 735. Mm-hmm. That was a big move.
Yeah.
Yeah.
I still think any one of the deals, had we gotten, I feel like over time, great deal. I just can't tell you, look in your eyes, that there's not a better deal.
Yeah,
let's go find the better deal.
It might be a great deal right now, and then my thought is, but what if in 6 months that amount of money I spent is not a good deal? And so it's the kind of dangerous game of trying to look to the future, which we cannot do. I mean, all we can do is look backwards, and at the moment we're in, and so looking forward doesn't really compute the way we want it to. Nonetheless, we've gotten really good at trying to.
Yeah.
So it's a balancing act.
Totally.
Some of it is probably going to come down to a gut feeling.
Yeah.
You know.
Definitely. Well, and we don't like to pressure sell anyone because everyone's situation is different, obviously, and you have to feel good about the home you purchase, as far as the price goes. And,
Sure.
and a lot of people, 80% of the people that bought during the pandemic did not have a great experience buying, but they bought a great house with a great rate in a lot of cases, and they're holding on to it. And that's part of what we're seeing in the market is, you've got volume is way down, as far as the number of people that are moving. And the number of people that are listing is actually down as well. And so when you have listing numbers and sales numbers down, that's part of the reason why the market hasn't really gone down in price, is because you have less listings and less buyers,
Sure.
right? Because people are still hanging on to these low interest rates, because it's such a big asset right now. So there's some really interesting dynamics, going on in the market. It'll be really interesting to see how it shakes out. And if history repeats itself, then this recession will look like very steady marginal stagnation / marginal growth, right?
I think that's where it's going to go, because you bring up a really good point. People are holding on because they can't stomach the idea of going from a 2% interest rate to 6.5%, right?
Yeah.
But as interest rates come down, just baseline conventional wisdom would say, well, then there's going to be more buyers.
Yeah.
But there's also going to be more sellers, because now they're going to be a little bit more able to stomach the idea of going from a 2.9% interest rate to a 4.9.
Yeah.
Much better than going from 2 to 6.5.
100%.
Well,
And they have needs.
And they have, there's life. Life is happening. And at some point, more buyers this past season said, I love my old rate, but I've got 4 kids and I got to do this.
Yeah,
Sure.
Did you
Fired.
just describe me? Yeah, I think you did.
It's off by a kid.
Sometimes the numbers stop mattering.
But
Yeah,
on the,
yeah.
on
You
the
need what
buyer
you
side,
You need space.
when you haven't owned before and you imagine what it was at 3%, it's hard to get your head around 6, or it's a cash flow problem.
Yeah,
So the buyers are lagging the sellers this last 5-6 months.
Mm-hmm.
Lower rates going to change that equation in the favor of bringing more buyers.
Yeah, and it's tricky. Our investor market's dropped off too, right? Because I've looked. I'm invested in real estate. I've flipped homes. I've bought homes to buy and hold, as rentals, and right now I just have not. I've found stuff that's close to breaking even, but it's still going to be a negative cash flow situation, right? So if you can't find something where you're not going to be forking out money every month to hold as a rental, then a lot of times it doesn't make sense to do it in our market. And so a lot of the buy and hold people that I know have gone out of state and they've bought homes in other markets where they can actually cash flow. And a lot of those are the markets that don't grow.
Sure.
So, right. So you have to choose whether you want growth or whether you want cash flow. Right. And Denver historically had both. Right. Now we have growth. We used to have growth and cash flow. And so that's where investors have fallen off, right? Especially the ones that are just seeking cash flow. They're going to the Midwest. They're going to other markets in the South. And so they're still buying up properties, just not here. So that's been another part of our market that's kind of dropped off. Yeah.
That reminds me a lot of, like if you're trading stocks or crypto, what traders call the smart money, the big investors that really analyze stuff, and you can see when it drops off or when there's a big sale by smart money.
Sure.
And so that's interesting. I think watching investor numbers could be kind of an important indicator for someone like me who, I have my business. I'm not married. I don't have kids. I have me and my dog right now, and all my friends that like to come over and hang out at my house. But I don't have a wife telling me I want this house and I want it right now. I don't have that, and I don't feel that way. So I look at it a little more through the lens of an investment, which I think, kind of the average retail buyer who wants to live in a home probably shouldn't look at it like that. The reason I look at it like that is I'm a hard person to tie down. I want the idea in my mind that I can get up and move whenever I want to.
Yeah.
And so that's a huge driving factor.
Sure.
I'm not looking to invest in this property to make money on it. I'm looking to invest in it into a point where I'm well invested in it at all times, where I could always sell it and exit, in a good position.
Yeah. Definitely.
And, I think a lot of millennials probably feel like that.
Yeah.
So,
I think we have a little more transient culture generation right now.
Yeah.
Just people that want to get up and go when they want to or need to.
I'm a hippie. I'm just like that anyway. I'm a get up, move around kind of person. So it's just, I think it's kind of part of the millennial culture, though. I think you're right.
Yeah, the commitment part of it, right? To commit to an area for sure. Yeah, that's a good point. Well, the good news is, if you were to buy a home in Peoria, Illinois, they might tell you like, hey, you gotta own this home for about 12 to 15 years to break even, right, on your closing costs. Where here, we usually tell people, hey, you got to live in this home for about 3 years, and then you're breaking even. So regardless of where the market's at, that's just the averages, right? If you bought the home in 2013, then you were breaking even in about 6 months, like, because we're double-digit appreciation every year for about, from 2013 all the way through 2019, or excuse me, 18. And then we hit a little recession there at the end of 18 to 19. But I mean, it was just rapid growth, right, for a while. And so that's part of why we are where we are, is because of all that rapid growth, little stagnation, pandemic, little stagnation, but you're right. It's these peaks and then like just plateaus is what you see more often than not in our market. So we've had a plateau for about 3 years now. And so I'm curious, what's coming next, if rates drop, if they really drop significantly to 4 something, I think we see another peak coming. I really do.
Yeah, sure. I mean, it would get there just by the nature of it, because a lot of people who felt like they couldn't access the market would have access to it. And like you were saying, the first-time buyers are a low segment of that buying populace right now. They're going to kind of get where I'm at, where they see opportunity and they're finally thinking of buying a house.
Totally.
And I could be wrong, but some of these houses I'm looking at that are, we want to be in the low 7s or less.
Yeah.
To me, they should be some of these like 660, 680, and it's 40 grand less than what they're asking.
Yeah.
And will we get there? Probably not. But man, would I feel good if we even got halfway there? Because then if it dips down to that point, it's a couple of years to get back out of it.
Yeah.
I've never lived somewhere for less than 3 years. I've been in my current place, but I haven't moved out yet. And the place I was at before that, I was there for 6. And so to wrap my head around living somewhere 3 to 5 years, really easy to do, actually. Even though I do want to be able to get up and go.
Yeah.
I know I'm not going to.
You're not a total hippie.
I'm not going to. Yeah, I know I'm not going to. So, we're getting close. As somebody who likes to look at data, I want that Fred data point. I want kind of see what's going to happen with these 4 houses in this one neighborhood I'm looking at. One of them has to do something. It either has to sell, delist, cut their price, go under contract. I mean, something has to happen eventually. And then I won't feel FOMO on missing out on that one if it sells. I'll just know that, well, based on what happened with this house, I can comfortably make this decision over here with these ones. And that's the way I'm looking at it.
Yeah. No, that's great. Well, I'm sending you this report that I'm getting all these numbers from, so you can look at it.
Awesome.
And any of our listeners, if you would like that report, just message us, on the YouTube channel here, and comment, and we'll shoot that to you as well with your email, or just get in touch with us that way, and we'll send that over to you. But this has been a great discussion.
Certainly,
I love,
inviting me.
Yeah, absolutely, love talking back and forth on it. And I will say, we had 2 deals last year where we came in, I think, 75 low on both deals, and we wrote the offer. The sellers said, "We're offended. We can't believe you offered that. It's just unspeakable that you would put a number down like that on paper for our house, right? Because we face a certain direction where we get better wind flow in our house, and just kidding. But like some sellers, like they build up value right where there's really no value, and because they've lived there for so long, and it's nostalgic,
sentimental
and
too.
it's sentimental value.
They have that emotional connection to it too, which is also probably weird for you to see, since you said it's not really emotional for you. It's more of an investment
But if
mindset.
he was that owner,
Yeah.
he wouldn't be that emotional.
Maybe not. Yeah, I don't know. I haven't owned a house to know it.
Maybe not.
I know sentimental value is something you can't share with anyone else, and so it doesn't translate to dollars, unfortunately. And some of my offers, I think, even maybe, offend the owners, maybe even offend their agent, and I still want to go in with them, see where they land back, because that's just another point of data for us in our pocket. I don't think anyone's gonna go home and cry about the numbers we put on paper.
And in the seller's pocket too.
Right.
I mean, they get another data point that registers in their mind. And that's
True.
what happened on both these deals last year where we came in that low. They got offended, they got emotional, and then we gave it a week. And then we came back with the same exact offer the next week and they took it in both cases. And that doesn't always happen, but that happened twice last year. So, and they were both great areas in Centennial, right off Quebec and C470, nice parts of town where it's desirable to live there, but they were dated homes, and both of those homes we were able to pick up and then turn around and flip and, resell. But the point of the story being that strategy of letting them get emotional. And when that happens, oftentimes the person that's staying like, the stern of a ship is the one that's going to win the negotiation, right? Because
Sure.
you're not getting emotional. You're thinking about this very logically. You kind of have power being, like you said, nothing else is controlling this. It's you're thinking more like an investment. That's a good position to be in from a leverage standpoint.
Sure.
So we love working with people like you, and obviously any family dynamic we love working with. But sometimes it's just you're in a position where you've got that window of opportunity there in your life. Where 5-10 years down the road, if you're married with kids, like you're thinking about all kinds of different factors,
Of course.
and
Not just the numbers.
Yep.
You have a lot more to consider.
100%. Yeah.
Yeah. I mean, it's probably a little more difficult for you guys in a way to have a client like that as well, because I mean, coming from as a used car salesman, that's the life I chose, right? We want people to buy cars from us. When we have the client that wants to look at every Carfax and go look at 10 cars and look at this and that, and they don't really care about the excitement behind the vehicle, we know that our work's cut out for us. We'll probably have 3 or 4 visits. We have to try to show them the value in ours a lot more than just because a lot of salespeople are lazy. A lot of used car dealerships are lazy. They just present the car. Here's the keys. Go drive it.
Yeah.
And then they're almost like mad at you when you come back and you don't want to buy it, right? And so obviously, just when you're selling anything, the buyer having an emotional response to it is a positive thing.
Totally.
Because of the way I think about things at my store, I don't teach our staff to try to go for that emotional thing. I am really numbers and logical, and we probably miss some business because we don't quote unquote put people into the ether like that.
Yeah.
That's just how I think. It's the way I approach business, and not everyone's going to be able to do that.
Yep.
But if you can muster up, even fake it till you make it, some of that poise, whether
Yep.
you're buying or selling something, I think it's going to benefit
Yeah.
both sides.
No, that's
you know.
awesome. I love that because I'm like when I go to a restaurant, I'm not a big drinker, so I'll ask for a water, or a Diet Coke, or something like that.
Sure.
And when the waiter gives you any type of a look because you're not getting alcohol and you're not going to run up the bill for a tip, I'm like, dude, you just dictated your tip right there by your body language, right?
Yeah.
And so I love the fact that you guys you don't make them feel bad for wanting to test the market, being a Walmart shopper or whatever.
Yeah.
You just know this is who we're dealing with. So we got to adjust our sales tactics and our psychology behind it. So that psychology degree is paying off.
Just
And
put value behind
the
what
strategy.
you're selling instead of
Yep.
the perception of value. And
Yeah.
perception of value is still important. I'm still a sales guy,
100%.
but if you actually have the value there and you focus on the numbers,
Yep.
and the best way for me to do that, because we sell cars, but how do we get those cars? We buy them.
Yeah.
I have to go buy them and have all this poise and look at all this data.
Yep.
So that when I go to sell it, the value is baked into the cake there. So,
Totally.
my approach as a buyer feeds the value that we have as a seller
Yeah.
as well. And so it takes 2 to tango, but it's all one cohesive process.
Love it. Well, speaking of cake, that waiter doesn't know that I'm going to order 2 or 3 desserts.
Right.
Because my
Exactly.
kids and my wife want them. So
Hell, sometimes
we
I'll
make
order
it
2
up.
entrees.
We make it up. Well, tell us a little bit. So Alfred Auto Sales is your company, right? Your auto
is.
shop that you run and a car dealership, I should say, not auto shop. That's a totally different thing.
We do a little bit of auto repair on the collision damage side of things.
Okay.
But yeah, it's been about 4 years. We're in Arvada. Used cars only. I've been in the car business for 16 years. I got in super young, started car detailing. Like as soon as I was 16 and had a car,
Nice.
I was a mobile detailer and started working at dealerships. Been in that business a long time. Working for the big corporate dealerships is quite the undertaking. I mean, you work a ton of hours, they bleed you dry. They make you do that emotional ether thing and grind the customer and let me go talk to my manager.
Yeah.
I got sick of that, so I opened my own store, having done sales management, finance management. I kind of felt like I knew enough that I didn't have to carry the baton of these big dealers.
Yeah.
So we do things a little differently. It's a lot more chill. It's a lot faster of a process
Nice.
than the 6 hours you go. Sometimes you go to a dealership, you're there 4 hours, you leave with no car.
Yeah.
You know, we try to get you out with a car in 2 hours.
That's great.
Put a little warranty on the vehicle, 6 months, that covers a lot of this stuff. And that goes back to just putting the value in the car.
Yeah.
We don't rely so much on the emotion.
Right.
We don't even spray our cars off every day. Our VAT is an industrial place. You come look at a car at our lot, there's going to be some dust on the windshield. And, you know, we don't want you to fall in love with the glint of the paint. It's about value. And so that's how we run our business. And it's nice. It's named after my dog, Alfred. He's there every day.
Nice.
Customers love it. So he's on the banner. He's our mascot. And yeah, we help people find vehicles. We also reality check them, like you guys have had to do to me sometimes.
That's cool.
I mean, especially credit situations. Not everybody's credit stands on their own.
Yep.
And it is our job sometimes to educate the customer. And we try to do that without offending them. Because a lot of people are like me, where I'm dignified in my confidence of my data in my research I've done. And that's good. We want that to be the case. But there is also here's the reality of the situation.
Yeah.
And like, here's what you're going to get for your money. And here's what the banks are willing to do for you based on your credit. Here's what you need down. And here's what you probably can't accomplish, without bringing something else to the table, like a cosigner or money down or what have you. So, we try to be very pragmatic. And
that's great.
Yeah, it's not a all puppies and rainbows, empathetic, have the emotion and be in the ether sales process there. And I'd like to see more car dealerships and industries be that way, because I think when you're dealing with raw data, you flourish.
Yeah, definitely. That's cool. I love your approach.
Thank you.
That's really awesome. And how long have you been in business then?
4 years.
Okay, nice.
4 years. Yeah, we've been nice, steady, organic growth.
Good.
It obviously
That's the
good
best
enough that I contacted you guys and started thinking about buying a house in the city where my business is. So
that's great.
It's been great. Yeah,
Next step, a
been
bigger
blessed.
yard.
Yeah, well, I have a decent little size yard. The Denver Metro is not known for large yards. I've come to find, but
I meant car yard.
for the lot.
The only limitation to his business, as I've learned, is how many cars he can park.
It is a function of how many cars we can sell in a month is totally based on how many we have ready to sell at a time.
Yeah.
A lot of car dealerships, their magic number is twice what you want to sell. You want to sell 50 cars in a month, you need 100 cars. We turn a little quicker than that. We probably turn 6 or 7 for every 10 we have on the lot. So if we have 30, 40 cars on the lot, we'll sell 25 to 30. And so that just is a function of getting them done quickly, making sure they have value that's indisputable, and making the buying process quick and comfortable rather than this convoluted thing where you have to talk to 18 people and the janitor to be able to leave the building. So we do turn quicker. Would having a bigger lot help? Absolutely. Do I want to move from where I'm at? I don't know. It's an undertaking, and I feel like we haven't maximized the potential of that location consistently yet. We have 3 months in a row where we sell 30 cars. Out of that, then we'd want to step up and get to that 40, that 50, that 60. But at this time, we're rocking there. It's the atmosphere we've built there, I think, is just nice and cool, and it's a good location. So
that's awesome.
Yeah, always something to think about for the future, but also a little comfortable where I'm at.
Yeah, that's great. Well, definitely, we'll encourage anybody that's looking, for a car to get up your way, and obviously you take cars too, right?
We buy, we sell,
buy them back,
hail and collision damage. We handle the insurance claims, everything. Try to waive deductibles when we can. So we do a little bit of all that. And then if you're in the unfortunate situation where you bring your car to us, it's in collision damage and it's totaled out, then we'll help you find a replacement, of course.
Sweet. Yeah, a little bit of everything. That's great.
Little bit of everything.
Smart.
Mostly the sales side, but we buy, we sell, we trade. We're a broker. We'll go find a car for somebody if they're looking for something specific, Lexus GX460 or something,
That's awesome.
Yeah.
I like those. I like the
they're
new
so cute.
Lexuses. Yeah.
I keep
You got to
telling my
use one of
mom,
those
get a
with low
Lexus.
miles. Yeah. I might be interested here in a year or two.
Yeah, we go find those. That's one of the cars I go look for people a lot, and I'll go find them somewhere like Texas where they don't really need four-wheel drive. So the market, it doesn't demand the premium that, I mean, that car
for
here in
less.
Colorado pulls all the money.
Yeah.
So we'll get one shipped in and from Texas, and you get a really good deal.
Yeah.
And a really good deal on a car means you bought it for $2,000 less than what the value is.
Yeah.
You're never going to buy a car for half the value, or if you get $5,000
Right.
off, like
Yeah.
that's the pipe dream. You get $2,000 off a car, you're in good position. Because even a year or two down the road, your car's probably going to be really close to what it's worth. And unlike houses, cars depreciate. It's a lot of moving parts, all hooked up to a computer on 4 sets of rubber meant to go 80 miles an hour on concrete. So it's, they're gonna wear and tear, and they're gonna go down in value. So if you get something that holds its value, like a Lexus, $2,000 under market value, you are in a good position. So that's what we try to do.
I should have had my son talk to you about a week ago.
You buy something.
He's putting money into something.
Uh-oh.
Anyway, offline.
Well, Gary, thank you. Appreciate you coming in,
Yeah,
and
thanks.
this has been
Thanks,
fun
Gary.
for us.
Yeah,
Just
thanks for
great
the invite.
discussion. Yeah,
great
absolutely.
to talk with you guys. Hopefully, help bring some insights to some of your viewers, and you've learned a little bit more about me, so that probably helps us move forward. And
For sure.
And September 30th is right around the corner, so we'll get that last Fred data point, and hopefully something in the market will happen.
Yeah, well, we'll see. There's more movement will happen for sure. I'm thinking so. Gabby, question of the day made Gary sweat a little bit. I liked it. That was good. But great time. Thanks, Gary. Appreciate it. And
Thank you.
we'll catch you guys next time.